All right, welcome back to the Noob Selling Options channel. Today, we're popping the hood on the tracker for our weekly explainer, looking exactly at where our capital's sitting and more importantly, what moves we're making on the ground. If you're here to see how option strategies play out with real capital in real time, well, you are in the exact right place. So let's just jump straight into the data and unpack the logic driving our decisions for next week.
So before we look at the hard numbers, we really need to set the stage here. The CNN Fear and Greed Index is sitting right at 67. We are squarely in greed territory right now. It is honestly fascinating to see how euphoric the broader market is at the moment, but that is exactly when a super disciplined, contrarian approach is absolutely crucial. Instead of just getting swept up in all that hype and chasing those big green candles, we're going to use this as a reminder to stay patient, protect our downside, and strictly look for strategic entries. Let's keep that greedy backdrop in mind as we go. Okay, diving right into the macro view, we can see the entire portfolio population fully invested as of May 1st, 2026. This is the whole shebang, every ticker, every single share. And if you look down at the bottom, our total invested capital is sitting at a very healthy $231,698.47. Every last dollar is deployed and put to work. Now, to really understand how this giant machine operates, let's break down how these individual parts group together. And here's the bird's eye view of that macro structure, our classic barbell strategy. I actually love looking at this because it's brilliant how closely it aligns with our target goals right now. We are sitting perfectly at a stable 59-41 split. The AI fortress makes up exactly 59%, while the crypto ecosystem is holding incredibly steady at 41%. Seeing that 60-40 target allocation between NASDAQ AI megacaps and the broader crypto ecosystem map out this cleanly in the real data, that's just a thing of beauty.
Let's quickly break down why this specific 59-41 split is just so incredibly powerful for us. Think of it like a tale of two very different but totally complementary engines. The AI Fortress side, that 59%, well, that's our anchor. It is just packed with cash-flowing, wide-moat tech giants. We're talking the absolute heavyweights here. AMD, Amazon, Meta, Google, Broadcom, and ServiceNow. They give us the structural integrity required to weather the market storms. Then, on the flip side, that 41% crypto ecosystem is our high beta engine. It completely leans into the massive volatility of digital assets to give us that asymmetric upside. The Fortress keeps our foundation compounding steadily, while the crypto side aggressively goes for those broader long-term targets.
Right, so with that structural foundation locked in, let's zoom in on the actual action from this past week. Because across that entire $231,000 portfolio, there was literally only one major change. And that's the number 100. Exactly 100 shares of ServiceNow, ticker NOW, got called away from us. Now, since we previously held a really robust 200-share position in this wide moat giant, we're currently left with just 100 shares holding the line for us in the AI Fortress. I mean, sure, it always stings a little bit to see great shares leave the account, but hey, that's just part of the process, right? Your immediate instinct might honestly be, man, we lost 100 shares of a phenomenal company, let's just go out and buy them right back. But wait, remember that Fear and Greed Index we just talked about? The market is euphoric right now, and now is sitting around $91.16. As this quote perfectly points out, refraining from just outright buying shares when the broader market is this greedy is exactly the kind of disciplined, contrarian approach that preserves your capital over the long haul. Refusing to just buy them back at a premium simply because they were called away is a matter of pure discipline.
So, the real question is, how do we strategically get those shares back without overpaying? Well, here is the tactical play for next week. We are looking to sell a cash-secured put on ServiceNow at an $89 strike price with a super short one-week expiration. Basically, instead of paying the ridiculous premium this euphoric market is demanding, we're going to leverage the options market to try and name our own price.
Now, you might be wondering why the $89 strike specifically? Well, there are three highly specific, data-driven reasons why this is an absolute fantastic play right now. Number one, it provides a defined margin of safety. Number two, it keeps the wheel strategy in perpetual motion. And number three, it aligns beautifully with a classic Peter Lynch valuation. Let's actually break these mechanics down so you can see them at work. Okay, first up, let's talk about that margin of safety and keeping the wheel turning. With ServiceNow trading around $91.16 right now, setting our strike at $89 immediately gives us about a 2.3% downward cushion. Guys, we are literally getting paid a premium by the market just to sit and wait for the stock to drop to a price we'd prefer to pay anyway. And if the market stays greedy and ServiceNow holds anywhere above $89 by the end of next week, the option just expires worthless. What does that mean for us? We keep 100% of that premium as pure, unadulterated income, and we simply write another cash-secured put the next week. We get paid to wait. It is a beautiful cycle. But here is where it gets really fun. The sheer beauty of the math behind the Peter Lynch valuation is wild. If we take the projected 2026 earnings per share of $4.14 and we lock in an acquisition cost at our $89 target strike, our forward PE ratio becomes 21.49. Now divide that forward PE by ServiceNow's target growth rate of 21%, and the PEG ratio lands perfectly at 1.02. In the Peter Lynch playbook, a PEG ratio hovering right around 1.0 is literally a near-perfect fair or bargain entry point for a growth company. Targeting that 89 strike draws a firm line in the sand. We only redeploy that cash if the market brings the stock down to a flawless risk-adjusted valuation. No exceptions.
And that, my friends, brings us to the end of our strategic breakdown for the week. The fortress is anchored, the crypto engine is fully primed, and our disciplined cash-secured put strategy is totally locked in for ServiceNow. But now I want to turn it over to you. How are you deploying your capital in this greedy market? Are you buying outright? Are you selling puts? Or are you just sitting on cash? Let me know your strategies down in the comments. And hey, if you found this explainer helpful for navigating these crazy market conditions, please drop a like and hit that subscribe button for the Noob Selling Options channel so you do not miss next week's update. Stay disciplined out there, stick to your allocations, and I will see you next time.